SoFi. This stock is absolutely down massively in the last couple of months. It is down 51% now since its peak, and it is just continuing to fall. What is the reason for this? Well, there has been downgrades since January of Wall Street analysts basically sharing their concerns, and that has in turn really hurt SoFi. That was almost like the catalyst for this recent decline, and of course their earnings guidance weren't as strong as people wanted it to be. And of course, broad market conditions, especially in the negative direction, are always going to hurt stocks like SoFi, as fintech stocks always tend to struggle when there is fluctuations within interest rates, which there is now expected to be, as if interest rates are going to go up, people may not take out loans as often as they would if interest rates were lower, meaning that the customer base for SoFi is going to obviously decline. However, when we look at the guidance for SoFi over the next year, we can see a projected growth rate of 77%, which is absolutely massive. But we will get on to their financials later on in this video. So US bank stocks are generally shrinking right now, and they are getting harmed quite significantly. And when competitors to SoFi like Robinhood announce similar loan platforms, it's obviously going to hurt SoFi intrinsically, as investors or consumers are going to go towards the more well-renowned name rather than the new kid on the block. So what is the intrinsic valuation for SoFi? Is this a stock in which should grow exponentially intrinsically alone, or is it something in which is going to need some sort of momentum? Well, intrinsically, this stock looks to be very undervalued currently. On the left here, we have an intrinsic value set at $96 with a margin of safety of 25%. This gives you an acceptable buy price at $72. On the right here, we have a bearish table. This gives us an intrinsic value set at $49 with a 25% margin of safety. This gives you an acceptable buy price at $37 with the current price being set at $9.57. This stock just looks to be an absolute steal at this rate, even with the differentiated analysts' opinions. And looking at Peter Lynch's valuation here, we get a result of 5, which is absolutely outstanding, meaning this stock is very undervalued. This, of course, takes into account the future earnings per share growth, which is, of course, the earnings per share growth rate here with a mean surprise rate, which I have added, which isn't actually that much of an accurate surprise rate. It would actually be higher, but I did reduce it just because one of their quarters was absolutely stupidly high here, as you can see. So I did reduce that down. So SoFi definitely looks to be undervalued, and it is definitely falling day by day at the moment, and it could be seen as being a bit unjustified just due to the intrinsic value, but I do think it is justified with the macroeconomic news coming out, especially with all of these tariffs. Inflation's obviously going to go up, interest rates are probably going to go up, and stocks like SoFi are going to be the ones that are going to take the runt of this. Looking here on the chart, we have the support set down here at $7.98. We are well below all of the exponential moving averages now, and on a MACD indicator, we are well and truly into a short position, and this is going to last for quite some time, I think. I think this broad market consensus of selling pressure is just going to continue now for quite some time. But when we look on a 15-minute chart, what can we see? Well, it is the exact same story, with us being below all of the moving averages now, and the MACD indicator being well into a short position. It's clear to see that SoFi is just going to continue to see selling pressure well into the next couple of weeks or potentially even months. But that could mean that this is a potential really good buying opportunity, probably not right now, but maybe within the next couple of weeks to months for SoFi, as this stock does look massively undervalued. Obviously, we have seen this massive hike in the last couple of months, really. I mean, since the start of its hike, it reached a peak of 150% nearly, so it's something in which really was justified for SoFi and should have continued, but obviously broad market consensus pushed this stock straight back down. And currently, based off of 19 analysts, SoFi is in at a hold, with 4 putting this at a strong buy, 1 at a buy, 9 at a hold, 2 at a sell, and 3 at a strong sell. And the price targets are a low of 5 and a high of 20 over the next 12 months. So it's definitely a stock to watch. It is one of my favorite stocks in the market at the moment, just because of how undervalued it is. Their free cash flow isn't particularly great. That is something in which you would expect to be better, especially as this company has been around since 2011. So that is something in which I think a lot of investors are waiting to see, especially as it is a fintech stock, it should realistically have a better free cash flow than it does. So I'm going to end that video there. Again, I'm not a financial advisor. None of this is financial advice. You should always form your own opinion of these stocks and invest with your own knowledge. With that being said, I hope you have enjoyed this video and found it somewhat useful. If you could please leave a like and subscribe, it would be greatly appreciated, and I will see you for the next video.